Hello everyone. The RBI announced the June MPC decision and the key decisions are as follows. The MPC unanimously decided to keep the policy repo rate unchanged at 5.25 in line with market expectations. The stance was also kept unchanged as neutral. Projections and assumptions. Inflation MPC observed core inflation excluding precious metal is lower. Crude oil has averaged at $110 per barrel from April till June 2026 and is likely to remain elevated. FY27 inflation is projected at 5.1% versus 4.6, while core inflation is projected at 4.7% versus 4.4 as projected in the April 26 policy. There are upside risks to inflation. Let's see the growth. Growth numbers is now pegged at 4.6% versus 6.9% as projected in the April policy. Let's see the other key measures. FIIs are now exempted from tax on interest in government securities. Government securities under FAR route, all new issuances under 15-year, 30-year, and 40-year securities are now included. The limits for NRI and OCI in equity investment would without SEBI registrations are now increased. A facility of concessional forex swap till 30th September to incentivize borrowing by PSUs and authorized dealer banks under FCNR. Restore the time limit to realize export proceeds within 9 months as against 15 months earlier. Overall, RBI will continue to ensure appropriate liquidity in the banking system and remain data dependent. Given that the market has already been discounting around 50 to 75 basis point rate hike at the current levels, the 10-year GSEC yield and 40-year GSEC yield are down by about 4 to 5 basis point. 2 to 3-year corporate bond yields are down by around 20 to 25 basis point due to FX measures and liquidity inflows. With tax reduction on GSEC, the probability of GSEC being included in Euroclear has increased along with inclusion in Bloomberg Aggregate Bond Index. Concessional FX swap and GSEC tax reduction is likely to bring in about $50 to $75 billion worth of flows. The above measures will help in balancing the BOP deficit for the year. This will reduce pressure on the rupee and absorption of inflow by the RBI will also lead to increase in the FX reserve and improvement of domestic liquidity conditions. Rupee dollar has appreciated by about 30 to 35 paise post the measures taken by the RBI to boost foreign inflows. Given the projection on inflation, there is a scope of about 50 basis point rate hike. However, RBI would like to wait and watch. Recommendation for the investors. The scheme yield curve is also steep as the duration of the fund increases. Investors should continue to select fund based on their investment horizon. Thank you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.